Welcome. You are listening to Purpose Driven Wealth, the podcast for empowered investors. If you're an investor who is tired of playing the Wall Street casino, stay tuned. On this show, we bring on industry experts to discuss leading strategies to help you make empowered decisions with your hard-earned capital. And now, here is your host, Mo Bina.
Welcome to Purpose Driven Wealth. I'm your host, Mo Bina. Today on the show, we have Chris Prefontaine. Chris is a multi-time best-selling author of Real Estate on Your Terms, The New Rules of Real Estate Investing, and Sell with Authority for Real Estate Investors. He's also the founder and CEO of smartrealestatecoach.com and also the host of the Smart Real Estate Coach podcast. Chris, welcome to the show.
Thanks, Mo. Pleasure to be here, my friend.
Yeah, thank you for coming on. Chris, you've been involved in real estate for over 30 years. I'd love to start things off with you kind of like summarizing and talking about your journey in the real estate space.
Yeah, I think we would take all day, but I'll give a 10,000 foot view and then you can bring me back to anything you want. How's that?
Sounds great.
All right, cool. So yeah, 1991 was my journey into real estate. I'll just be brief along the way and skip the boring. I started out building homes on what we call spot lots, single lots. And we did it. I was in my 20s. I was naive. I didn't know that, you can't make people wait for their money and do terms. I didn't even know what that meant back then. We would build on someone's lot. They would get paid when the house was done and sold, and all the vendors would wait until it was done and sold. So it'd be like a 120-day process. From there, I bought and built and sold a Realty Executives franchise. So I had my broker hat on, never had done that as a realtor. And then that from 2000 to 2008, bringing me right to the crash. I was coaching people throughout US and Canada, really in the realtor space versus what I do now in the investor space, and typically over $1 million commission earners back then. But then the crash nailed us. I had a bunch of commercial properties. I had condominium conversions going on, but I got annihilated in 08. Had to downsize into a one-bedroom apartment with my wife from an oceanfront home. So it was a humbling experience. That enabled us, though, in hindsight, to build up the business, to re-engineer the business. And when we started back in 2012, 13-ish, we said, okay, what are the rules? I said, what are the rules? And the rules were, well, I can't use my credit because I don't have any anymore. I can't use cash. I don't have that anymore. So we had to buy everything creatively on terms. And for us, creative real estate means lease purchase, owner financing, and things of that nature. That has built what now is, fast forward to today, my son-in-law, a great team all around the country, doing deals locally and then helping students in the trenches do deals all around North America. So it's not selling them a course. It's, hey, here's our foundation resource center. Now let's do deals together. Let's lock arms. And that interactive coaching, Mo, is, I think, the differentiator. So that was a long answer, but the best I could do was for 30 years.
No, that was a great summary. A couple follow-up questions for what you just talked about.
Yeah.
So the first thing was you talked about buying and selling on terms. Can you kind of get into the details of that?
Yeah. So by need back in 12, 13, as I alluded to, we had to do that. And that means we will put a home under agreement by way of a lease purchase agreement. The deposit built into our agreements is $10. Literally, the students have access to all these agreements. So we can control a lot of real estate for $10 a property and create, we'll talk about it later, but create a massive amount of profits in that, what we call the 3 paydays, which we've trademarked. So lease purchase is one way we buy. That's what terms means. The second way we buy is owner financing. For us, Mo, owner financing is a bit niche down. We will speak with and seek out sellers who are free and clear, no mortgage. And that lends itself to some great deal structuring with principal only monthly payments to the seller. So if you think about that, I don't care what market you're in. If you get a 5 or 10 year owner financing term with a seller, so you're paying them every month on principal only, no interest, you have a really nice recession hedge there because the principal is going down so fast, regardless of what the market's doing. And the third way we buy is what they call subject to existing finance, or sub to. It means I'm going to buy someone's home, completely opposite of owner financing, debt free. This person's usually in need of financial relief and they just want to be done with their house. They could have 2 homes, or they got COVID, or whatever it might be. They lost a job, a death, a divorce. I've seen it all. and we buy their home, the loan stays in their name until such time someday in the future I cash it out. So we're never, ever going on personally signing on loans. And I can tell you from 08 crash, that's a far difference stress-wise and mentally than going to sleep at night knowing, okay, I got all these properties and the bank could come at me. And they will. We control 80 to 100 million at any one time in real estate between us and our what we call our associates, our students. And not one single loan is anyone on ever. And that's a big difference.
Wow, that's a real game changer.
Yeah.
Is it very difficult to find these types of properties with like the owner financing and the lease purchase agreements, or how difficult and how many properties does a student typically have to go through in order to find one of these types of gems?
Yeah, good few questions in there. So people say all the time, how do you convince people, right? It's really about, I'll give you the metrics and I'll give you the emotional part. So the metrics are ballpark, everybody's different. But roughly speaking, we fill out what's called a property information sheet when we speak to someone. Unless they say no, get lost. If they're even remotely open to hearing more, we fill that up. For about 25, I'll go backwards. For about 11 or 15 of those property information sheets, sellers we speak with, will have a lead. About 17 to 25 of those will get us in the door for an appointment. It's just how many people we have to talk to. And when you're around 40 of those, so 10 a week, you've got a deal in your hands. And it just depends. The market changes and the skill sets change and people's work ethic changes. But generally speaking, that's a rough metric. And then all we're doing is what? We're just listening to sellers. It's not about convincing. It's not about selling. It's not about the special script. There are scripts, of course, but the scripts are around extracting information from the seller, finding out what problem we can solve. Or in the case of a free and clear seller, like the person I bought my commercial building from, where our companies are, he was debt free, and it wasn't about solving a problem. It was about, hey, I want to get all the money and the market's not giving it to me, and I'm willing to do terms. So it's about accomplishing a goal or solving a problem with creative financing. And creative financing, by the way, side note, right now in this market, and I'd say, I was speaking with my team this morning, I'd say for the next 3-ish years, maybe more, there's enormous demand for creative real estate right now outside of banks. Enormous demand.
Interesting. So I guess in one sense, like one of the examples you just gave is, I'm a seller, I want a specific price, and if you can get me my price, then I'm willing to then give you XYZ. I don't want to say concessions, but terms, I guess, right?
Yeah.
And then that's how you can basically both sides accomplish what they're looking for. Did I kind of get that right?
Yeah. So if I'm calling a seller, as you can imagine, all the wholesaling companies out there and the fix and flip, which, by the way, another side note, they're all seeking us out now because their deals dry up. Creative real estate, the deals don't dry up. The word itself, creative real estate, implies I can pivot in any market. So they're all coming to us now. But the difference when I call the seller is the seller has been bombarded by wholesalers and flippers who have to, it's their business model, it's not bad. They have to get that thing at 60 or 70 cents on the dollar. They have to.
Yeah.
So they'll have a wall up, and immediately when I tell them, look, price is not my concern. I can actually sometimes pay full. The guard comes down immediately. You hear it on the phone, and they're open to what you have to say. There's a big difference there, talking to a seller.
Interesting. Yeah. When you're working with your students, is there any specific type of like investment strategy that you're utilizing? Like, I guess, for example, are you focused on capital appreciation, passive income, or a hybrid of the two?
Got it. No, very good question though. So our exit on all these deals, almost all, would be a rent-to-own vehicle for the buyer. Now, here's the big difference, Mo. This is super important for the listeners. There are so many, I can go on podcast after podcast right now online and find people in my space talking publicly saying, yeah, they do rent-to-own, and they don't care if the buyer ever cashes out because they'll just refill it and collect more money. Well, that might be okay with their legal documents, but that's just bogus morally and ethically. Our model sets the buyer up to win. We only have about a 2 to 5% default rate. I think that's probably better than bank loans. And it's because we do so much screening up front. My son, Nick, is our buyer specialist, and we've fine-tuned that process. So if a buyer gets accepted and put into one of our homes, they're going to cash out unless they have a major life event that changes it again. And that happens. So when I say they're going to cash out, these are buyers that come to the table that are truly buyers, not renters that have some dream and their credit has been bad for 30 years, but they really are buyers who, because of COVID or because of COVID, they went in their own business. They need some time now with the banks, seasoning, they call it. They just need time, and we can give them that time if they're truly a buyer. So they have a good down payment. They might not have good credit, but we can help them with that. And they're going to buy the house, and they treat the house like it's theirs. That's a big difference out there right now from other mentors and educators teaching. Who cares? Throw buyers in the house, let them default. It's awful. I wouldn't go to sleep good at night like that.
Yeah, it's always better, right, to find someone who's going to have pride of ownership, right, in the dwelling.
Yeah, way better.
Yeah.
Yep.
And are you focused on any particular markets nationwide, or wherever it pencils out is fine with structuring your deals?
Yeah, it's fine wherever, because so many niches are dependent upon, like I have good friends in the apartment industry, apartment buildings, and they will have to time markets, and there's all kinds of people that teach that. You don't have to in creative real estate. So if a student comes in our Wicked Smart community, I say, great, within 50 miles of you, unless you're in a remote area, within 50 miles of you, we're going to find enough deals. Keeping in mind to exit these deals, Mo, over time, 2, 3, 4, 5 years, the 3 paydays total profit, they range from like a low of 40 or 50 grand to a high of 250. That's a lot of money. So once we can teach people to learn that skill set, it's not overnight, but once they can learn that, how many deals they actually need? They don't need 50 deals a year. Come on. So, so in their 50-mile radius, you could have 3, 4 people and you'd be fine. Plenty of deals.
Oh, interesting. You just mentioned Wicked Smart. What do you mean by Wicked? I also kind of see it in the background over your head as well, too.
Yeah.
Well, but so what is meant by Wicked Smart? And you also mentioned Wicked Smart Community. Can you explain what these are?
Yeah, so the company started out as Smart Real Estate Coach, and then over the years progressed into the Boston accent and slogan Wicked Smart. And then we trademarked Wicked Smart, and then the company got named Wicked Smart LLC, and everything turned to Wicked Smart instead of Smart Real Estate Coach. So it's just our name. We call the community of associates, there's about 140 of them. We call that the Wicked Smart community. They're on Slack every day together, helping each other, answering questions. They're on Zoom every week together. We do live calls. There's another weekly meeting called the Wicked Smart Sit Down, where everybody comes together. So there's just a lot of support, because in the industry, sadly, and I've seen it because I've gone through the industry this is my 32nd year. There's just a lot of people selling stuff. And I'm not saying there's nothing wrong with their stuff, but the problem is nothing comes behind it for support. And people get frustrated because they sit in a room or they go through a course and it looks all rosy. And then they're on their own and they go out and they go, I didn't know all these curveballs were going to come at me. So the purpose of the Wicked Smart community and all these things we do is to wrap our arms around them and support them and get them to the deal point. That's all we care about.
Yeah, that's actually a really good point. There's a lot of shovels being sold these days. It kind of reminds me of the gold rush, right? It's like everyone's out there trying to sell something, and there's so many shovel sellers out there. But at the end of the day, it's the support and the partnership, it sounds like, with your community sounds like the thing that really sets it apart.
Yeah, I tell them up front, I shoot video after video for their onboarding when they come in the community to say, look, a couple things. One, if you need a deal like you need oxygen right now, just fix that first and then come in, because I don't want anyone to come in going, I need a deal in 30 days or 90, or I can't do this. This is not, in my opinion, a try. This is I've researched, I've got enough free stuff, because like we're going to give you a whole community free books. Why? I want people to look for free. I want them to go on YouTube. There's 200 deals we post. Look at all that. If you think it resonates, then start with us. So it's not a dip your toe in. It's, hey, Chris, I saw everything and I'm ready to crush this, and I'm willing to give it 3 years. And then you'll have a much better experience. So it's really managing the expectations away from all that noise out there that says, get rich quick, make $1 million tomorrow. I'm telling you, no, but you will create some serious skill sets that you'll have for life once you do it.
Yeah, and exactly. That's what really empowers people in the end, is really having that skill set that they can carry forward.
Yeah, and if you don't talk to me ever again, you got that for life. Like, you could do your own homes this way. My son and son-in-law, I said, are in the business. Well, my son-in-law and daughter came to work with me in 2015 from a personal training and bartending industry, because we live in a tourist area. Well, when you go on your own, just like all these people from COVID who left to do their own business, the banks require what's called 2 years seasoning, as you know. And so they couldn't buy a house. Their very first house, Mo, was a lease purchase, which they wound out of instead of staying in for like 120 grand profit after like 2 or 3 years. So this can be done for your own home as well as in investments.
Oh, interesting. the students that kind of that you partner with and work with in your community, well, what are their objectives? Are they looking for just supplemental income? Are they looking to transition out of their 9 to 5 type job, or a mixture of the two, or maybe they come in maybe just looking for a supplemental income, and then they become so empowered that they just said, hey, I can just leave my full-time job at this point.
This is great subject because I actually got into this thing 2 days ago with a gentleman who said it was about his wife. His wife was in our community, and he said, "I'd like to know all the metrics in your entire company for all your students and see if they're actually hitting their goals." And I said, "Well, that's kind of strange." And he said, "Why?" Because everyone's different. Some people come in and say, "Chris, show me," to your question, "how to do this for a supplemental." And you know what? If I can do 2 of these a year, I'm tickled pink. Other people come in and say, like Brian in Chicago comes to mind, 17 years in corporate America, making a lot of money. So he said, "Chris, I want to go full time. I want to, not need, want to replace a significant multiple 6-figure income. Give me the plan to do that." Well, those two people are totally different. You can't compare those metrics. So everyone's different. And then I'll give you an extreme case. We have a woman in our community who owns a brokerage in Virginia, super entrepreneurial woman, super positive. She comes to the calls and hangs out with me and is in the highest level coaching just to hang out with me to get to my dream team and to be around good people. She's not cranking out deals. She just wants to be around good people, because who you surround yourself with matters. So there's 3 different extremes there, right? So everybody has different goals. I hope I answered that.
No, you did very well, in fact. And you'd mentioned earlier about your 3 paydays. You want to get into that as well?
Mm-hmm. So when I came out of the '08 crash, I started thinking, as I said earlier, about what would I want it to look like by need and by design. One of the things was, okay, I'm used to, because I was a broker, I was an investor, I was a coach. I'm used to every January going, man, I got to like do this again. I got to do that many transactions to get paid. Mm-hmm. And yes, it was good money. I have no qualms about it, but it did feel like you were on a treadmill, and January was a bit of a bummer, not exciting. So the 3 paydays takes it away from, I do a deal, I get a check, I do a deal, I get a check, and puts it into, I do a deal, I get an immediate check. Great. That's payday 1. That's when a buyer comes forward and puts a down payment down because they're a serious buyer and it's non-refundable. Payday 2, I start this income stream of monthly income. That's like sticking tens of thousands or hundreds of thousands in the bank and getting passive income. That's the difference between what I pay for that house to the seller or to their bank and what I'm collecting from my buyer until they get their mortgage. There's a delta there, and it's like 300 to 1,000 a house per month. And we usually control, 50 to 60 properties a month. And then the third payday is really cool. So I got the short-term income, I got the monthly. The third payday is when I cash this house out in, anywhere from 18 months to 10 years, I'm going to have all of that principal pay down that accrued during that term. And I'm going to have the markup, whatever I did at the very beginning, to lock that buyer in. So that's what I mean when I said all 3 of those paydays total like 40 or 50 grand to 250.
Okay. Yeah, that totally makes sense. You'd mentioned about the crash in 08, 09. Right now, where we are in 2023, there's, let's call it an air of uncertainty out there. Yeah. Largely kind of contingent on, interest rates and how interest rates have moved quite a bit. And of course, real estate a lot of times is, is a leveraged, purchase. What do you kind of see out there? And do you, with your community, do you ever try and time the market in terms of looking for particular lulls, and were they even exceptional buying opportunities? How do you kind of take all this, the uncertainty, where rates are, softening of the economy, and how do you kind of formulate all these variables in terms of like a strategy and kind of how you and your community navigates in the real estate sector?
Yeah. Okay. So a few things. We don't necessarily time, right? So, we gotta bounce on this now. And we don't sit back and wait for timing reasons. What we do is, what we are aware of, however, is, let me give you some real examples, best way to do it. Okay, COVID hits, March of 20, people panic. I get on and loud and as many times as I could scream, told my community, double down. This is a time where sellers and buyers need guidance. They need you. Don't pull back like everybody's telling you to. And our amount of our deals going under contract, which we call a taken, went up by 3 times in March and April. Then the market immediately changed and got hot. So I said, okay, guys, I'm not going to scream double down, because now what's going to happen is you have to do more calls to get the same amount of deals. Just life. Know your metrics and know that you're going to do, instead of maybe 40 calls that I said earlier, maybe you have to do 70 to get that deal. Okay, that's all right. And then when the interest rates went up, I screamed, look, now all these sellers are going to be panicking. And so this is the time to reach out. And they didn't have to, because the ones that were doing calls actively, the sellers were seeking them out now. So point is, there's one constant in real estate: the market's going to always change. Just understand how to pivot, or be around people in our space that can show you and guide you how to pivot, because you're always going to do deals. One last example is, in this market, am I good with telling our students or our family team, hey, let's do a deal with 2-year terms? No, I'm not comfortable with that. The market's too volatile right now. Am I comfortable with a deal? A brand new student the other day is structuring a 10-year owner financing deal. It's like a 6-figure deal for her. That is a beautiful deal. I'm not worried about her or that deal, because over 10 years, she's going to have all that principal pay down. The market could change 3 times. It won't matter. So understanding how to pivot, what kind of terms to do, who to speak to as the market's changing. Is it the for sale by owners? Is it the expireds? Depends on what the market's doing. So again, long answer. I hope I nailed that, because that was a good kind of combo question there.
Yeah. Sorry if I intertwined so many things into there.
No, it's good, because I can give live examples. I hope that worked.
Yeah, it was. So yeah, I mean, like you use the example of like structuring a long-term deal that basically helps you to kind of weather any short-term volatility, right?
Exactly. Yeah, exactly. And keep in mind, when you put buyers in these homes, people say to me, well, what if the market goes down? Well, what if it goes up? If you bought a house and you're truly a buyer, you bought a house. You don't call the bank back if it went down and go, oh, excuse me, I made a mistake. No. So in the rent to own, it's the same thing.
Yeah.
If the market goes down, well, you wait it out, and you got to wait till it comes back, or you extend your term. There's always a pivot. Always deal after a deal.
Yeah, you'd mentioned like at the beginning of COVID how there was essentially increased deal flow. What are you kind of seeing right now in like early 2023? Is there increased deal flow that you're seeing right now with interest rates?
It's finally starting to come back like that. Yeah, meaning it's getting easier again. Easier again for us. I'll never say easy, but easier, because of the volatility. So it's funny. I was on a show yesterday, pretty big radio show, and the host we were talking like this, and he said something that I agree with wholeheartedly, which is nobody knows. Like, people say, what's your prediction? Nobody knows. So why am I going to waste my breath? Like, the billionaires don't know. What I do know is what I said earlier. It's going to constantly change. So I got to get good at pivoting. That's all. The deal flow is going up right now. Yeah. Sellers are listening to the media. Good for us, but they shouldn't be. And the media is screaming, crash, crash, crash. I can say this opinion wise. It's not a prediction. The same circumstances that were in 2008 that I lived through are not the same now. They're not the same. Yeah. The foreclosure rate's not the same. They're just not the same. So you can't compare it, although the media is telling you, but you can't compare it. It doesn't mean I don't think there's going to be a lull. I'm just saying it's not the same.
Yeah, and agree. And in 2008 and even the years prior that led up to it, the lending standards were very, very lax, right?
Highly different.
And it's highly different now. It's so much more difficult to get a mortgage. So, I mean, that's something that, even if you've just refinanced, I mean, the amount of paperwork and hassle that you got to go through in order to do a refinance is astronomical. So the conditions are not really the same. But you're right, that the media, and if people continue to listen to the media, especially when it comes to investing and making investment decisions, they're always going to kind of be in that, they're not going to be, I guess, in the right situation to make the best decisions, are they?
Yeah, and it's a fact. That's a fact. Does not mean your opinion. It's a fact that when markets pivot and there's turmoil and there's indecision, there's chaos, that's when fortunes are created for those that know how to do it. And I hate to sound like a broken record, but you got to learn how to be creative in any market. We have a couple really high production volume brokers in our community, mortgage brokers, who want to learn how to do creative real estate. They're hovering between 17 and 20% of their applicants are qualifying. 17 to 20%. That means 80 to 83% of the market can't get a loan right now today. Now, some can in 3 months, some can in 6 months. We're usually dealing with the people that need like 6 months to 3 years. And that number is going up and up and up. And as such, the percentage of deals being done with creative real estate outside of banks has gone from like early 90s. There might have been like 2 or 3% of the deals were considered creative real estate, 2 or 3%. It's in the teens now. I struggle to find a really solid, reputable, like credible stat, but I know it's going up, up, up. And that's why we're getting the demand we are. So if you've ever thought, if you're listening, you ever thought, well, I hear about real estate and I hear about these people that created fortunes, get in front of it. It's not like it's tomorrow. I'm not going to tell you there's urgency to do it tomorrow, but there's urgency to learn it So over the next 3 to 5 to 7 years, you can set yourself and your family up for decades. Spend 3 to 5 years to set up for decades. Pretty good deal. That's my opinion.
Yeah, that's really well said. And I guess just from the very standpoint of someone like wanting to get involved in real estate and to just um, uh, whatever it is that they want to buy, whether it be a townhouse or a condo or a single family home, to know that there's going to be this large pool of renters out there, people who can't qualify to buy for whatever reason. They don't have the income requirements or the credit requirements. And so just even like owning rental real estate will be something that based off of our discussion today, sounds like something that it's going to be a very advantageous, to get involved in for the years to come.
Yeah, this is good you brought this up, because I would have forgot to say, like, once you start buying on terms creatively, people say, well, why do you want to get out of all these deals? Why wouldn't you keep them? We do. We call it wealth stacking, and wealth stacking is more for the student who comes in and they get up to about 5 properties. And then we start analyzing those properties, Mo, and we say, all right, this one here, the seller's owed money at the end. Why don't we call them now and try to renegotiate and extend the terms? Or why don't we call them now and change it from a lease to a buy? There's things you can do to now keep those in your portfolio by choice. So you might take 5 and say, you know what, one of those is going to be a keeper. The rental market's going sky high. I'll keep that one for my portfolio long term, like 20 years. So we have many of those in our portfolio. So myself and my son and son-in-law, we get together every quarter and go, okay, we do the wealth stacking and we analyze and say, which ones can we change the terms on? Real estate's not a one deal. You can renegotiate a lot of stuff. Win-win too. It's not like it's a negative for the seller.
Yeah. So with this wealth stacking, would that be analogous to when people hear about legacy building and building wealth for, your generation or future generations in your family?
Yeah, this property's in our portfolio that my son-in-law Zach kids around. My grandson Remy's 5, and he kids around and says this will be Remy's property. Like, I probably won't cash it out. We have stuff that's in there for 20 or 30 years, and it's not like I need, quote unquote, that to happen. You know what I mean? So yeah, this is definitely generational wealth. And then we talk to the associates, especially the higher level. I personally coach the 2 out of 5 levels, the 2 top levels. And we talk about this stuff like next level. Some calls, we won't even talk about deals. It's about everything else. And so it's a unique community.
Oh, interesting. I know we kind of mentioned about not knowing what the future is going to bring, but you did kind of allude to the fact that, recently there's kind of been improved or easier deal flow. If you had to take a guess over the next 3 to 6 months, do you think that the level of deal flow will kind of stabilize, or do you think that it may continue to possibly even improve further?
The short answer is yes, meaning I think you're going to see a either flat or up as far as the deal flow. What the market does could be flat or down, but I think it's going to be flat or up for the deal flow, only because our community is kind of unique. It's small, but it's big enough to be sort of a microcosm of society.
Mm-hmm.
You get 140 people spread across mostly US, but I'll say North America. And I get on the calls every Thursday and I get the feedback. And then I have my 7 certified coaches and they give us feedback. So I kind of get a feel for, okay, what pockets are we having sellers panicking already? What pockets are flat and what pockets might still have a little hotspot? So it's neat to see, but overall it's trending up for sure. We keep the metrics.
Okay. That's good to know. And as far as the cyclical nature of real estate, it sounds like for the most part, what you're doing in your community is pivoting more than anything else. So regardless of what's going on in the real estate market and the cyclical nature of it, you guys are out there kind of like doing the creative financing, pivoting, figuring out ways of constantly like moving forward rather than kind of like staying stagnant. Do you have any advice that you would offer, like, real estate investors out there, whether they're novice or they've been doing this a while? And sometimes, that deer in the headlights, sometimes seems to happen with certain people. Is there any advice that maybe you can offer investors?
Yeah, I'll say this is real general. So this could be outside of investors too. It'll work literally in the restaurant business, not facetiously, like anything. 3 steps. One, if you believe some of what Mo and I are talking about and you go, yeah, creative makes sense, but I don't get it, or I don't know how it fits with me. So step 1, find a niche, if it's creative, great, that you can get behind. Like, creative in general is about helping people. Other niches may not be as much. So if you like that, great. Then that's step 1. Step 2, find someone. I'm not so biased to think everybody can relate to me. I get it. I'm from New England. We go fast. We're blunt. Like, I might not fit for some people. It's okay. but find someone in the creative niche that you can get behind. When I say get behind, Mo, this is a little bit more difficult because it's goal wise, like, are they where you want to be? But in my opinion, it's also morals and ethically, because and lifestyle. I know plenty of successful people in real estate that trash their marriage and have no relationship with their kids. I don't think that's someone I want to follow. So I meant that whole picture. So find the niche, find someone in the niche you can get behind, and then third, put the blinders on for 3 years. That's it. Now that's hard to do, easier said. So if you can do that, you will have a good experience. I promise you that. It's the people that say, okay, I'll do that, Chris. And a year comes by and they go, oh, I thought it'd be faster, and they quit. Or 18 months or 24, 36 months or more, blinders on, no shiny objects, you'll have a great experience.
Yeah, well said. There's something to be said for just continuously trying to improve on a daily basis, not get distracted, and just continue to move forward. Sometimes, people seem to think that, oh, well, I just need like a few months or 6 months. And it's like, nobody became a doctor or a lawyer overnight. I mean, that's something that was honed for years and years. And so getting involved in whether it be real estate or any other type of profession or any type of niche, is going to take, continuous like hard work. And, you got to just continue at it.
Right.
Sometimes when people get involved in something they haven't been involved in before, I've seen it myself where it seems like they kind of give up a little too easily and they get discouraged too soon.
100%. It's sad. I had a guy in Colorado. I always say baggage, and it's not in a bad way. Like, you bring stuff to the table. We all do. I did. I was trashed for 4 years because of the crash mentally. He had his wife passed away. It was very sad. When he joined us, he said, I want you to teach me how to do this. It took him 365 days, literally. But in that last month of the year, his first year with us, he did 3 owner financing deals. The first 2 were over 6 figures. The third was almost 6 figures. How many people would have quit before that? A whole bunch, sadly. So I give him credit. We still talk to this day. We're super good friends. And that's a story I use all the time, because he could have, and most would have, quit if they didn't have that 3-year mission drilled into their brain.
Okay, well said. Chris, how can people find out more about you and also your books and your other resources?
We created a link, Mo, just for your listeners. Just go to Wicked Smart Books with an S, wickedsmartbooks.com/purpose. And that's going to give them a couple of the best sellers. And it's not one of those offers where I can't stand them, where you go, yeah, free book, and you click it, and then it says put in $8 for shipping. We will ship it. It's our cost. You're going to get a nice little pack. You might throw some goodies in there. And then if you want to go through, if you can deal with listening to me for another 55 minutes, there's what I call a master's class. It's free. I want everything to be free until you understand if you want to go forward. And just go to smartrealestatecoach.com/masters class. And I'll walk you through A through Z. What does this look like? I'll show you some sample deals. We'll do some Q&A that you can witness, and it'll be a good experience for you if you want to go through it. Those 2 things.
Oh, great. And we're going to share and make sure we have those resources linked also in the show notes as well, too.
Awesome.
Thank you, Chris, for coming on to the show today.
You bet. Thanks for having me. I appreciate it. Hope we gave at least a few nuggets to everybody.
I think we gave many good nuggets out there. Thank you so much. You provided an amazing amount of value to the audience. That's all for today. And thank you, everyone, for tuning in. And until next time, have a great week.
Thank you for tuning into this week's show. If you are interested in learning how alternative investments can help you build purpose-driven wealth, sign up on the High Rise Capital website to receive our monthly newsletter and free investor ebook. Lastly, if you enjoyed this episode, don't forget to subscribe and leave a 5-star review. Thank you for listening to Purpose Driven Wealth, the podcast for empowered investors.